Hello, everyone. Dave Landry here. Welcome back to Trading Simplified. Once again, this is a part of the show where I get amazed that we're as many episodes as we've done. We're up to 18 already. It's really going by quick. So what do we talk about? Well, this week I want to talk about getting into hot IPOs early, and I'm really just going to be able to scratch the surface here. But I want to look at the last quarter of IPOs, the last 90 days of IPOs, and then I want to show you which ones I actually did purchase during that time, and we're going to try to get through as many of those as possible. There's a lot to go through, though, and I want to focus mostly on getting in them as early as possible, and sometimes as early as day 5. And then just a reminder real quick, if you have something you want me to cover, feel free to shoot an email in davelandry.com/contact, and I'll be happy to cover it. Or you could also notify the good folks over at trading at StockCharts.com. If you do need to reach me, again, www.davelandry.com/contact. If you want the slides and a bunch of other information to keep you busy for a long time, go to davelandry.com/StockCharts. And if you're watching the show live, give me about an hour or so to get my charts uploaded. All right. Now, I'm sure you've probably heard the story to Sardines by now, so I'm going to go through it really quickly. Basically, there was a guy who saw a bunch of other guys screaming and hollering at the end of a wharf, and this story has morphed into various forms. But the gist of it is they were trading sardine tins, and they were buying and selling and getting all excited about it, and the guy decided that he was going to jump in the fray, and he paid a lot of money for a can of sardine tins and probably ended up with the high bid of the day. Well, when he got home, he thought it'd be a good idea to open up his sardines and have him a little expensive lunch. And when he went to do so, he found out that they were rotten. So he tracked down the guy that sold them to him and said, "Hey, those sardines were rotten." He says, "Well, you silly fool, those sardines are for trading, not eating." And I think that makes a really good metaphor for IPOs, because a lot of times they will take off, but then they'll come right back in. But that's okay. You can make a lot of money during that fly phase. Just don't confuse issue with facts and fall in love with them. I'm a big fan of symbolism, and I actually have a sardine drive sign in my office to remind me that IPOs and stocks and other markets for that matter are made for trading, not eating. So getting that out the way, Will Rogers once said that you want to buy stocks that go up. If they don't go up, don't buy them. Now, obviously, this was all a little tongue-in-cheek, but with IPOs, you could pretty much do just that with a lot of caveats. Now, we're going to scratch the surface here today again, but I'm going to show you some very simple things that you can do. And I thought I was the first trend-following moron, but it looks like Mr. Rogers came long before I did. Now, technical analysis works because in order for a market to go from A to C, it's going to have to pass through B along the way. Now, you can't just buy at B, but with IPOs, a lot of times you can do just that. In fact, I actually have a pattern I call buy at B. Now, the main thing to remember with IPOs is that often your significant high or low is set during the first week of trading. So after about 5 bars, usually the IPO either takes off or it dies for the most part. And one thing you can do is buy the fly and avoid the die. In other words, buy stocks that go up. Now, sometimes they'll come public and they'll just die out. And this is a very common pattern. And again, we're going to look at the last 90 days of IPOs, and you'll see that there were quite a few die and dies. They just come public and begin to die, and they just keep on dying out. Well, you just simply don't buy those stocks. I gave a presentation a couple of years back, and I showed about a dozen of these die and die patterns just to avoid them. And then people began to think, or begin to ask me, he's like, "Well, Dave, are you saying that IPOs go down and you should avoid them, or we should short them?" And I'm like, no, the point is that the bad ones tend to die and the good ones tend to go up. Now, I've identified probably about a dozen of these patterns, but the two most common are the die and the die that I just showed you. And then the other one, the most common one and the most tradable one, would be the fly and the die. And when I show you a few actual trades in a minute, you'll see they did just that. Easy for me to say. I was able to get in, take partial profits, and then I get stopped out on the remainder, sometimes for a scratch and sometimes for a little bit of a profit for what I call the better than a poke in the eye trade. Now, again, you want to buy the fly, but just make sure you have a chair ready and simply just avoid the die. People ask me all the time, hey, this stock is coming public. What should I do? It's like, well, don't do anything for the first week. If it just dies out, then just completely avoid it. Now, here are some of the ground rules, and there's quite a few of them when it comes to IPOs, but I just want to show you a few of the main ones that I follow. You want to be really careful and avoid super thin IPOs. Now, it's kind of tough because you don't know if, even if they have good volume when you go in, if the volume won't dry up. And one of my clients was in one of these IPOs, and so was I. And the volume began to dry up, and he started calling it Hotel California because you can get in, but you can't get out of these stocks. So be really careful. Make sure you have adequate volume going in at least. And then there's no guarantee that that volume will continue, but at least you had volume going in. Now, we're talking about pioneer setups mostly today. And I think the reason I call them pioneer, not only are you early, but like the American pioneers, you're either going to get the gold or you're going to get arrows in your back. Now, I often say don't confuse the issue with facts, meaning don't worry about what a company does or anything like that. But there are some cases at IPOs where on these pioneer setups, I find it kind of hard to go in and trade them. And for instance, there's a marine company, One Marine, and they sell boats. And it's set up right now as an IPO pattern, but I just can't get too excited about it. But maybe as a secondary pattern, I'm going to show you one secondary pattern. In other words, like a pullback or a TKO or something like that, something that takes a while to establish as opposed to these pioneer patterns. So I'm still on the fence when it comes to confusing the issue with facts. And there's one big one that I did miss because I just thought it was a stupid stock. But as a general statement, you don't want to confuse the issue with facts. But in these pioneer setups, I tend to pick them apart a little bit more and actually look at what the company does and think about whether or not there's enough excitement or enough possible fad or whatever the case may be. And that'll make a little more sense as I get to some of these charts. Now, the other thing is you should have a decent range in these pioneer setups. So the first week or so of trading, you want to make sure it's at a pretty wide range, both up and down, obviously, to make it worthwhile trading. So if we look at the last 90 days of IPOs, now we did out a lot of thin ones, but there's still quite a few left. And this is just a candle glance chart. And I actually created this manually. And if you want the watch list, let me know and I can publish that watch list that I made for these. I am working with the powers of D over StockCharts, and I'm going to put in a request to see if there's a way to scan to give us the last 90 days of IPOs. But anyway, this was actually made by hand. So in this particular case, if you take a look at the first chart on here, the bars 2 or 3 behind aren't shown way back to November. It actually imploded from those levels. So this was one that actually went down. Although it's improved a little bit in more recent times, it would have been one that would have been avoided. It's also really thin. Here's one that went down from the get-go. So what will we do with that? Well, don't buy them unless they go up. Here's another one that went down from the get-go. Now here's one that went up, and I actually did end up buying this one. We'll take a look at that trade in just one second. And again, we'll go through as many trades as possible. By the way, ignore the first little dot if it shows up on these charts. That's the pre-market price of IPOs. We're not going to worry about that because that does not factor into our trading as technicians. We only look to trade them after they are public and see how they act. So this one's going sideways, obviously. This beam has gone up. I am long beam right now. We'll take a look at that trade in just 1 minute. This bill has headed higher. We'll take a look at that and why I didn't get in earlier. BNTX, obviously, it's become a fly and then a die. BRBR, I actually am long this one on a secondary setup, and that'll make sense in just 1 second. And that was a pullback. We got long on that one. Now here's a case where the range is pretty narrow. So in a case like that, we would actually avoid this particular IPO. Maybe a secondary setup. In other words, begins a trend and pull back, we might think about it. BRP is going sideways. BX initially took off, and now it's going mostly sideways. CABA has kind of died out. And again, this is a case where you're not seeing a few of the other bars where it had headed lower from day one. But you can see it has improved a little bit. Con, another one that's gone down. And it's beginning to improve a little bit in recent times, but that's just really one big bar up. And so far, it's kind of consolidating. So we'll just have to keep an eye on that one. Another one that's going sideways, sideways. And this one here, CNTG, also thin. CSPR, you can see what happened. It came public and then it imploded. So what do? Nothing. Now this DAU took off, but it did so on a wide range bar. It was hard to get in on that one. DNK, you can see, has a very, very narrow range. So that's something that I wouldn't get too excited about. DUO, it's really, really thin. In other words, the volume is low. EH is real thin. ETNB, which is beginning to improve a little bit, has gone mostly sideways, you can see, since it's come public. So there's nothing to do with that one. And again, it's another one of these stocks that's really thin. FRG is really thin. GRTX is thin. HPT, HBT, he tried to say, sideways and thin. HUIZ looks like it has a little bit of promise because it's traded higher, but unfortunately, the range is really, really tight on that. IMAR obviously headed lower. INDO obviously headed lower. And that INDO is also thin. The IPHA really thin. KLR came public and then began to implode. So for the most part, with a few exceptions, the ones that have headed nicely higher in here, I am long and bought, and the ones that have gone lower or sideways, I have avoided. So let's take a look at the rest of these. KRKR doesn't take a rocket surgeon to figure out which way that one's headed. LIZI, another one that's headed lower. Now, LMPX headed nicely higher. And when we start looking at some of these pioneer patterns that I use to get long some of these IPOs, you'll see that it does qualify in a lot of ways. Unfortunately, this is a case where I just couldn't get too excited about it. They are a car dealership, another one of those used car dealerships, and it doesn't even look like they have that many lots or anything. And I know I'm confusing the issue with facts, and I think some of my clients actually jumped in. We talked about this one in the Facebook group. And it was a very, very nice setup, but I just couldn't pull a trigger on it. And usually I don't care about these things, but with these pioneer setups, meaning getting in really, really early, I do at least take a peek at what the company does and think about whether or not it has a potential to cure the next car disease or some sort of fad or whatever. So what's the story, fad or glory? So as you can see, as we go through these, MKD headed lower, MNPR took off, but it was only the first couple of days of trading. Remember, we need at least 5 days of trading before we're going to enter an IPO. If I didn't say that, let me just repeat that. The IPO has to be trading for at least 5 days before we look to trade it. Now here's one that took off and it came back in. This one here, it's got a very narrow range. OCFT, I did play this particular stock on its way up. We'll take a look at that in just 1 second. ONEM, I am long that one. Now, ONU is the one we talked about a few minutes ago, or the one I talked about a few minutes ago. And maybe I'm confusing the issue with facts once again, but it is a stock that doesn't seem like could have a whole lot of excitement longer term. Okay, when we left off, we were talking about the last 90 days in these IPOs, and let's go through a few more of these, and then we'll take a look at my actual trades. OIST traded nicely. I forget why I didn't take this one. It might have been a little bit thin. I'm not sure if I have a chart on that one. This PGNY initially sort of took off and came back in, but I did play a secondary setup on that. We have that chart here. I'll show you in just 1 second. Secondary meaning a longer term pullback type of setup. Now this one sort of imploded, but then began to take off again. So far, it's going sideways. This one here, PPD, it has a fairly narrow range so far, but I put maybe on this. So maybe we just want to keep this one on our radar to see if the trend improves. PROF has headed nicely higher. Unfortunately, though, it's a little too thin to trade. RAPT has sold off fairly hard in recent times, so we're going to avoid that one. REYN looks kind of interesting in here because obviously it's headed in the right direction, but the range is pretty narrow on that one. So we're going to hold off for now. Now, RVMD just came public, so let's just keep an eye on that one for now. But so far, the range has been pretty tight. Ditto for SDGR. The SI is real thin, and then SITM has headed higher. And I am long this particular stock. We'll take a look at that trade in just 1 second. SPT has headed higher. I'm also long that one. Why? Well, because it's going up, right? TILA has headed higher. Unfortunately, it's thin. TFPP has gone completely sideways, as you can see. VEL sideways. VIR has taken off nicely. I did play this particular trade, and I'll show you the trades here in just 1 second. XP mostly sideways since it's gone public, so nothing to do there. And YAYO has imploded since it's gone public. Now let's take a look at some of these trades, the ones that I actually took. And by the way, one thing I was thinking about before we went live, because I was looking at some of these trades thinking like, well, why didn't I take that trade? In many cases, like it was thin, and there were other reasons possibly why I didn't take it, such as I didn't like the particular company. And again, I don't focus too much on that, but in some cases with these early pioneer setups, I considered that. But there are some cases where everything sort of sets up, and you just have to realize that, I guess unless you're Harvey Weinstein or Bill Cosby with an unlimited supply of roofies, you can't kiss all the women, right? So sometimes you just have to let them go. By the way, anything I mention, as I often say, I will mention before I actually take the trade, either through my trading service or my Facebook group. So this was ARQT. We talked about this one before. And what we're looking to do is after 5 days of trading, and we could actually get long on day 5 if it's a new closing high, which also exceeds the day 1 high, provided that the day 1 high is a high for the week. So in other words, if you look at this day 1 here, if this high would have been way up here, the entry would have been above that high, but in this particular case, it wasn't. So we're only looking to get long at a new closing high. So the buy was here. And I have a model account that I use for the StockCharts TV presentations, which is right around 100K. And in that particular case, 400 shares would have been the amount based on 2% risk. And we did talk about money management in one of the earlier shows. So go back in and watch that if you have time. Borrowing a line from Greg Morris, just don't operate heavy machinery afterwards. So with 5 points risk and initial profit target, our stop is down here, and our initial profit target is up at 30.76. And here's the actual buy. You can see on 2/7, right before the stock closed, these buy at B patterns, meaning that you're going to buy on a new closing high, can be a little scary because you're actually buying into the close and you're taking a bit of a leap of faith. Whereas other patterns where you trigger intraday, at least by the end of the day, you know where you stand, good, bad, or indifferent. But with these patterns, it can be a little scary. So Beam is another one, and you can see that Beam was brought up by one of my group members, and then I was actually doing my analysis when they brought this up. So they have a pretty good eye over there. And let's see, day 1, day 2, day 3, day 4, day 5. And day 5 is a new closing high. And it also set the high for the week. So that would be the buy on the close. And here's the actual trade. You can see on 212, 27.57 was the entry. Now, here's the thing. I rarely take a vacation, but I did take a vacation day on Thursday. And I didn't realize that I thought my profit target was 5 points higher. So shame on me. Shame. But actually, it was only about $3.30. So I should have sold half of it there if I would have paid attention to my Facebook group. I know some of you guys in there were actually selling out at those levels. But so far, just hanging on that one. Now, here's one that I didn't go after in early trading because the range was kind of narrow. So technically it was a pioneer setup way back here, okay? And then I did have what's called Landry light and a new closing high. So the 5-day SMA pattern, I need to come up with a good name for that. I keep saying that, but I never do. You're looking for daylight, meaning that the low is greater than the 5-day SMA, simple moving average. And you're also looking for a new closing high, which also has to be above the day one high if the day one high sets the high for the week. But in this particular case, you can see on day 3, that set the high for the first week of trading. So we don't have to be above that high, okay? Even though we almost were on that close. But I didn't like the range because it's a higher price stock and the range just wasn't there on this particular issue. The reason I bring up the price of a stock with the buy at B, not the 5-day SMA pattern, but the buy at B, as a general rule, the stock should be trading below $20 a share. Now, I'll make some exceptions here and there, but as a general rule, it's good to go after the somewhat lower priced IPOs. Now, this particular one, it did have a fairly narrow range when it made a pioneer setup, and that's why I did not take that particular pioneer setup. But later in trading, you can see it had a decent rally and it began to pull back, and we got long on this one around 22.50, and it's traded back and forth, but so far it's been a really bumpy ride. By the way, IPOs will be very volatile. You just have to learn to live with that, but the chance for making a lot of money makes it all worthwhile. I would rather trade a more volatile stock and trade fewer shares than a less volatile stock and trade more shares. Remember, something bad can always happen. Now, 1M, here's another one that we were talking about in the group. And you can see day 1, day 2, day 3, day 4, day 5, and your buys right there because it's a new closing high. Notice that the high for the week was set on day 2, okay? So that's your entry right there. In this particular case, based on the risking $2,000 per trade or 2% of an account roughly at 100K, that's 2,000. And 5 points was our initial profit target and stop. So if you do the math on that, that comes up to 400 shares. You can see that I got in near the close. And the reason that it's not right at the close is because I have multiple accounts that I trade, and it takes me a couple of minutes to get all the orders in. But I do try to get in as close to the close as possible with this particular pattern, just in case the stock comes back in. So again, 5 points risk and 5 points initial profit target. So stop is here. And then the initial profit target of 30 is up there. And I think it should be actually, let's see, 20. Yeah, that's right, because the entry is right around 25. So that would be 30 for the initial profit target. And the stop is 5 points below that. Let's take a look at PGNY. Now, this is one that I ended up taking a secondary setup on. Actually, I think I missed this trade. I did miss this trade. And the reason I missed it, as I discussed in one of the prior shows, and I think this is the same slide, was I was supposed to buy here, but it barely triggered and then came back in. And then I actually missed that second entry on that, where I should have gotten back in. And so far, it's taken off without me. So occasionally, As I showed you one earlier, I made one mistake because I wasn't paying attention. And then here's another case where I applied a little discretion and I actually missed a pretty good trade. It happens. Spelled with a silent SH. But just to show you ahead of time, this is where it was recommended. You can see down there, PGNY, that's 250 shares per 100K. And that's not a lot of shares if you think about it on a $100,000 account. And you can see that when you do have a very volatile stock, you just trade fewer shares. And the volatility helps to compensate for that, because there's a good chance, if it's a volatile stock, there's obviously you can get stopped out, but there's also a good chance that the stock can take off and you can make good money on the trade. So SPT is one we talked about recently. And here's my actual trades, 1,000 shares at 1902, and then flipped out 500 or half at 21, okay? Now notice in this particular case, ignore the day one here, because StockCharts shows the day one, and this is pre-market trading, so that's not an actual real day of trading. But in this particular case, day one did set the high, so we have to make sure that our closing high is also above that day one high. And here's where we took profits, or I took profits a few days later. SITM, another one of those we looked at earlier. You can see new closing high. In this particular case, this stock did set the new high for the week, so we also have to close above that high. If you go back in and watch a few of the shows, especially the ones where I do the trade walkthroughs, I explain that day one rule in a lot more detail. So here's the actual trades here, and this is one where I've forgotten that I had this many mistakes. This is another mistake where I sold out a little bit early by mistake. But those are the actual trades. This was the initial profit target on that particular one. So the buy was on the close by the dotted line, and the initial profit target was right here. Now, VIR set the high on day one. As you can see, again, you want to ignore this first little bar here. And then we also had nice little daylight and a new closing high. Daylight meaning that the low was above the 5-day moving average. Partial profits 2 days later. Unfortunately, the big move happened 1 day later. That would have been pretty nice, but in this particular case, partial profits the next day. Stock ran up and then came back in and stopped out on the remainder. OCFT, this is another one of those pioneer setups. Day one did set the high for the first week of trading. So we have to close above that high, and then we did. So the buy would be on that particular close. Partial profits were taken here, and then it came back in and stopped us out. At least in this particular case, we stopped out at a profit, and there are the trades right there. Now, I know I'm going through a lot of this really quickly, but again, you can request my slides afterwards. Now, here's one that I did not take just because I just can't get excited about this company because it's a boat dealership. Okay, I think we're out of time. I don't want to thank everybody for attending today. I appreciate you taking time to your busy schedule to be here. Anything unanswered, DaveLeonard.com/contact.